Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate documents into something you can actually understand. Today we're diving into a proxy statement from ELUTIA, a medical technology company. This isn't your typical exciting financial report, but trust me, there's some interesting stuff here if you know where to look, like what happens when a company stops being controlled. This proxy statement is basically a notice to ELUTIA's shareholders about their annual meeting where they'll vote on important company decisions. This document tells you what's on the agenda, who the board recommends you vote for, and some background information. Think of it as a user manual for your voting rights as a shareholder. The first thing to know is that the annual meeting is scheduled in May. Shareholders as of April get to vote. The main things they'll be voting on are electing directors, which is like voting for the managers of the company and ratifying their accounting firm, basically double checking the books. The first proposal is about electing board members. The board is divided into 3 classes, and each year one class is up for re-election. This year it's class 2, and the nominees are Bridget Makes and C. Randall Mills. If elected, they'll serve until 2028. It's important to elect the right people as they help make key company decisions such as direction. Let's take a quick look at the nominees. Bridget Makes has a strong background in finance and has worked with several biotech companies. C. Randall Mills is the current president and CEO of ELUTIA, with a long history in the medical field. The board recommends voting for these nominees. The second proposal is to approve PricewaterhouseCoopers LLP as their accounting firm for the year. The audit committee, which is responsible for overseeing the company's finances, already picked them, but they want shareholders to ratify or approve this decision. Now, how much does ELUTIA pay its accountants? For 2024, the audit fees were around $715,000 and similar to prior year. These fees cover the audit of their financial statements and reviews of their quarterly reports. The board also recommends voting for this proposal. Let's meet the team. C. Randall Mills is the president and CEO, Matthew Ferguson is the chief financial officer, and Michelle Leroy-Williams is the chief scientific officer. These are the people steering the ship. This section outlines the company's practices for managing itself. It covers things like board leadership, director independence, and risk management. Basically, it's how they try to keep things ethical and above board. Here's an interesting point. ELUTIA used to be a controlled company. This means that a small group of shareholders had most of the voting power, but after a stock offering, they're no longer controlled. This means they now have to follow stricter rules about having an independent board. The board has determined that 5 of its 6 directors are independent. This is important because independent directors are supposed to represent the interests of all shareholders, not just a controlling group. This wasn't always the case, but the board composition changed as of the beginning of this year. ELUTIA has 3 main committees: the audit committee, which oversees the company's finances, the compensation committee, which decides how much executives get paid, and the nominating and corporate governance committee, which finds and recommends new directors. The board of directors sees risk as a fundamental part of how they run the company, including things like new product development, legal proceedings, and commercial rollout. Specifically, they oversee major risks like product commercial focus and legal risk from proceedings. The audit committee also assists the board in fulfilling its risk oversight responsibilities by periodically reviewing things like the company's accounting and IT risks. ELUTIA has a policy to prevent insider trading, which is trading stock on information the public doesn't have. This prevents its employees, officers, and directors from buying or selling company stock based on insider information. They also aren't allowed to bet against the stock. Here's where we see how much the top executives are making. The total compensation is listed on this table. For example, the CEO, Dr. Mills, made about $4.5 million in 2024. This includes salary, stock awards, and other compensation. Worth noting is that Dr. Mills made double what he earned the year prior, mostly due to stock and option awards. The compensation includes salary, potential bonus, and some equity to allow the employees to benefit from the potential success of the company. Dr. Mills has a bonus of 60% of salary. The other officers have a bonus of 45% of their salary. This table shows the stock options and stock awards that each executive has that haven't vested yet, meaning they can't cash them out right now. This gives us an idea of how much potential future value they could receive if the company does well. There were some payments for legal fees incurred by Highgate and its affiliates. Highgate is connected to some members of ELUTIA's board. These payments were approved by the audit committee due to the indirect benefit to ELUTIA. ELUTIA sold shares and warrants to investors, including some who already owned a large chunk of the company. This brought in about $10.5 million. ELUTIA sold more warrants in a registered direct offering, one of the main investors being Nantahala Capital Management for an amount around $2.5 million. If you want to submit a proposal for the next shareholder meeting, you need to get it in writing to the company secretary by December this year. So what does all this mean for ELUTIA? ELUTIA's strengths include a board that is mostly independent, which should be more aligned with the interests of all shareholders. They also have a good process for identifying and managing company risk, as risk can make or break a company. One notable risk is the board and insider influence due to HighCape, due to them having the most voting power even if they now only have 26% of the Class A shares. This means that decisions could be made that benefit those insiders more than other shareholders. It's something to keep an eye on to make sure all shareholders are treated fairly. ELUTIA appears to be moving in the right direction. The transition from being a controlled company and the increased board independence are positive steps for corporate governance. Also, the board continues to pay careful attention to the challenges ahead. That's it for this dive into ELUTIA's proxy statement. Thanks for watching, and don't forget to like, comment and subscribe for more corporate decoding.